Time for our market roundup. Markets have ended in the red, with Sensex closing 417 points lower, while the Nifty has slipped below the 24,000 mark, reflecting weak sentiment in today's trading session. To help us understand why these changes are taking place, is joining us now is Harsh Satya from ET Now. Harsh, take it away.
Hi, yes. So we've seen banks under pressure today, and we've also seen IT under pressure today. And when you've got those two pockets, which are largely heavyweights on the index, significantly underperform. In fact, the Nifty Bank was down 1.5%. The Nifty IT was also down around 0.7%. So when you've got those two really underperforming, you start to see a drag on the index, and that's exactly what we've seen. 100 points lower on the Nifty 50 index at close today. We're relatively okay. We operated in a very tight band through the day. We were in around the 24K mark itself, so no significant breakdown seen today, despite some bit of weakness which has added up. Plus, it was expiry day, and on a day like that, generally when there's F&O expiry, you generally tend to see some moves, either positive or negative, and we've seen that kind of a move today as well. In terms of broader markets, though, the small and the mid-cap indices, they've done relatively better today. They've outperformed the index. The mid-cap index was, in fact, up 0.25% on such a tough day of trade. That one seems to have done fairly well for itself, of course. And the broader market, in terms of even the number of stocks sitting in the red versus the green, the number sitting in red was far more than the number sitting in the green. So that was the other drag. Overall, there was just a negative sentiment. One of the reasons for that, if I can just elaborate, is the fact that oil, crude, and Brent in particular, which is what we track, is at $111 a barrel. So that spike is what is leading to a more tempered kind of an environment with regard to markets. And the higher it spikes, of course, it starts to kill competition, or rather, it starts to kill demand. And that's what we will likely start to see if this continues. So that's the one big concern that markets have. If crude is elevated, that's definitely a negative. And that is exactly what's playing out.
Yes, come war or ceasefire, it is the oil blockade that currently seems to be a bigger problem, a bigger headache for the markets. So thank you, Harsh Satya, for joining us with those details.